Welcome to the weekly review of the markets from Hernandez Retirement Services. This is Agustin Hernandez. This week I will focus on the S&P 500 as a week ending January 11th, 2019. Are we beginning to see signs that this index is out of its current downtrend? Afterwards, I will revisit the US 10-year Treasury note and the Brasil Index to see if their current uptrend in action has continued. Finally, I end the video with what does it mean to see if we can get some clarity for all these markets. Before we begin the charts, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts reference are subjective. No strategy can ensure success or protect against loss. Investing involves risk including loss of principal. We start with the S&P 500. I again will use the split screen I premiered last week. The screens represent the last 3 months ending January 11th, 2019. The chart is the S&P 500 daily price action. Price is represented by the green and red line. In this chart, I put in a black horizontal line. This line from the beginning of the chart until mid-December was a line support. As you can see, price bounced off the line support 5 times during this time frame. Eventually, it knifed below that line and broke down about 10% in a week. Since then, we see that the S&P has rallied from the Christmas lows. Now, what was once the line support may turn out to be a new line of resistance. Let's see if the S&P can at least break above this line. Now the bottom chart, we take away the price and add 2 different indicators. The first one is the moving average indicators. The red line representing the long-term trend indicator to 200-day moving average, while the quicker trend line is the 50-day moving average. First, let's look at the relationship between these 2 indicators. Currently, the 200-day moving average is above the 50, which is negative. The 50-day line is trying to flatten out, but until it crosses above the 200-day line, it is just noise. Now the bottom indicator is the MACD. The MACD, or the moving average divergence, is a trend following momentum indicator that shows the relationship between 2 moving averages of a security's price. This tool is used to identify moving averages that are indicating a new trend, whether it's bullish or bearish. Now, in my charts, when the bars are green, that means momentum is positive. When it is yellow, it is negative. Now, this is important. Any market or index will go through these positive and negative cycles. What is most important is where they become positive or negative. When there is a positive momentum in the area I wrote MACD strength, that is momentum on strength. That happens normally in healthy markets. Now, when we get positive momentum where it shows MACD weakness, it is worth looking at, but does not mean conditions have or will change. For example, the S&P 500 here, which is currently in the green, but in MACD weakness. Let's look at the last time the MACD bars went yellow. It was also the time the 50-day went below the 200-day. As a result, price dropped about 10%. We are already in weakness, so any new MACD negative momentum in the future can be detrimental to this index. So both of these charts confirm the S&P 500 is in weakness. We follow that chart with the chart of the US 10-year Treasury note. I will use the same indicators in these two charts. The top chart shows the nice uptrend line the US Treasury note has been in. This line has become the line of support. Notice that it has on occasion tested it but bounced right off and has gone higher. Another healthy aspect to this price chart is the fact that since the rally started, the lows are higher every time. Again, that shows a healthy index. Finally, for this index to show that this is a long-term true uptrend rally, it will have to break above the highs it hit in early January. Now let's focus on the moving averages in the bottom chart. Here we see a positive golden cross late in December of 2018. So it is in a healthy spot with the 50-day above the 200-day. Now, will momentum be strong enough to get the 200-day line to slope higher? We shall see. What does the MACD indicator tell us? On my chart, it is yellow, so as of Friday, the 11th, momentum was negative. But unlike the S&P, the MACD lines are in strength. Which means if momentum turns back green or positive, then a strong upside move may occur. There would be less headwind in this rally. To show you the importance of the MACD lines and where they are positive and negative, let's look at the MACD at the beginning of the chart. At that time, momentum was positive, but the lines were in MACD weakness. Notice, during the same time frame, the price was choppy and could not gain much traction. In November, we could see the MACD turn green again, and this time the lines go into MACD strength. Look at the price action during this positive momentum action. It had a healthy positive return. So any return to a positive momentum from this area in the MACD is very positive for the 10-year note. The final index we will look at is the Brasil Index. The top chart we see is price action. The black line was a line of resistance for several months as the index could not break above it. Eventually, it did break through, pulled back, and moved higher. That is an early sign of strength. Now, the index ended the week on a lower note, but we shall see if it can do what the 10-year note has done and stay in strength. Also, on its next pullback, can the lows be higher than the previous low? Looking at the bottom chart, we see the moving averages are still in a positive area. The 50-day moving average is above its 200-day moving average. It also looks like the 200-day line is beginning to flatten out. That is step one. What needs to happen to get a strong uptrend is that the 200-day line would need to start sloping up. Now, where are we with its MACD? Currently, we are in positive momentum, and also both lines are in the strength zone. Now, the key for a true rally is how long can it stay in the strength zone. Also, at some point, momentum will turn negative, yellow on these bars. The key is, can it stay in the area of strength and then turn back positive? If it can accomplish that, then we may see the beginning of a mature positive uptrend. What does this mean? As I have stated in previous videos, the S&P is in weakness. Yes, we have had positive weeks, but true technical damage was done. It will need more positive weeks before we can confirm an end to the current downside trend. As a technical trader, it does not matter to me what the Fed does. After all, markets have gone up during rising rates before, just as they have gone down in lower rate environments. Talk of recession? Who knows? Usually we get the official news of being in a recession when we are already in one. So that is the ultimate lagging indicator. What I care about is price and volume. As of now, the S&P is below its 200-day moving average. Momentum indicators such as the MACD on daily charts are in weakness. So don't get caught up with the daily noise of the markets for now, until the S&P can at least get above its 200-day moving average. Now, the US 10-year note is in strength. Yes, it is not a high flyer index, but it is in a positive trend. The next 3 to 4 weeks will determine if the 10-year note will continue higher, or if the US equity markets can find a floor and begin a new uptrend. But as of Friday, it is looking good for this government obligation. Finally, what we see in Brazil is great. Now, it does not mean that it will get into a true mature bullish rally, but it does show that we could start looking at other parts of the world to see if there are any other indices or markets that are in an uptrend. As of now, it is defying the global equity downtrend, and maybe it will falter soon as well. But for now at least, there is one equity market with the potential to break out on the upside. I would like to thank you for viewing this video, and I hope it was helpful. Please subscribe to my channel for future videos.